In the bottom window is the stocks only AD line for the New York, and right above that is the advanced decline volume for the New York, and right above that is the ratio adjusted McClellan volume oscillator. You can read about ratio adjusted here, and in the top is the ratio adjusted McClellan breadth oscillator, and you can see that it has a downwards trajectory, so a little bit of a bearish divergence between stocks only AD line and volume and its own volume ratio adjusted oscillator here. And that's a direct reflection on a narrow set of stocks and equities having huge volumes of advancers, and then you can see here that the breadth of the market, meaning the expansiveness, is still very narrow, probably expanding further than the Magnificent Seven, but still has a bearish divergence here. So let's give this a chance for the breadth to expand to all the other left behinds, which is starting to happen, just not reflecting here in the ratio adjusted McClellan breadth oscillator. And this one here, the advanced decline volume line for the stocks only, you can see it's a 19 EMA in blue, 39 EMA in red. So they have nice upwards trajectories, and we got to see if this can still keep either pushing everything up, all these arrows, same thing with the AD line, or just kind of bounce off of it and just keep getting higher highs on everything. It doesn't necessarily have to push the arrows up. It would be nice to see this one get pushed up though for the McClellan breadth oscillator. And this looks the same as the traditional version, which would just be straight advancers minus decliners on a rolling basis. And you can see ratio adjusted has more calculations in it, and that gives us the zero line. And here's the NYA rising wedge charts looking back about 25 or 30 years. And again, NYA, you can consider the A all. So we look at stocks only, AD line just before this, so that's common stocks. And you can consider this stocks and CEFs, closed-end funds, ETFs galore, bond ETFs, preferred stocks, and even SPACs and warrants. So that's all for everything. And now we'll zoom into this area with the descending broadening wedge pattern there. And the NYA weekly has gone above the top line of the descending broadening wedge, which is a bullish move there, and this is actually a bullish pattern. You can see the floor here in red. You can see the previous videos that I've linked to here to listen about my justification for creating this the way I did through these huge whipsaws. But NYA weekly price is above it, and that's pretty good. Looks like it's pointed down, but it's still not even touching it. And here's the NYA AD line in the top window, NYAD, and this bottom one is the stocks only that we look at more often than this NYAAD line. And they both look similar. You can see that some of the patterns are similar, but difference is enough to make them worthy of looking at both of them. And I've accepted this small whipsaw in the both of them just so that I can anchor the top line at this peak here, and it was a good placement. You can see that the NYAAD line is right up on it and kind of going sideways. It has a little bit of an upwards trajectory you can see in the side window over here. And the stocks only AD line really went through hell here. I mean, it just sliced through some of these trend lines here. It didn't make it down to the blue ones, but for sure the red ones went below them, and I really thought that it was going to head towards at least touch these blue ones, but sure enough, it turned around and really shot up right through all of these. So that was a real show of strength there. Had a little pause at this line here from some of these common valleys back here, and then it just shot up above that, but has yet to get above the top of the descending broadening wedge in blue here. And there's a floor on the both of them here connecting some of these lower valleys here and up here too. So the stocks only has a little bit of more work to do for the AD line, and same thing with the NYA, but actually in a little better shape. Probably the bond ETFs and some of those income funds like that are pushing this up more than actually the stocks only AD line. And the intermediate term volume oscillator here in the top window in brown really had a nice move. Look at that, just a straight up shot, just like breath down here. So it went above this horizontal line that signifies some of the common peaks and is above there and headed up towards some of these nosebleed sections up here. But that's looking pretty good, and it actually took a leg up recently. Same thing with the breadth. So what we're after is to look like this. Makes a rocket shot above zero. Here it came back and tested it and then just bounced off of it and headed up, and then had some ups and downs here, a complex pattern here staying above zero, and that was that beautiful run coming out of October 2020 and just straight up. We'll go look at that in a minute, but that's what we're after here. Yeah, it went up there, same thing with breadth. Let's see what happens when it turns around again. Every time it turned around, I went back under this green zero line here and here and formed a complex pattern under zero. So that's not what we want to see. We want to see the complex pattern above zero. And here's that run from October 2020 all the way up through 2022. And the instruments in the NYA above their 200-day simple moving average is clinging on to the 60 line here, so that's a good sign. Maybe just a pause and then keep heading up. It has plenty of room to move to the upside. I got it stopped at 80, but you can see back in that era that we were talking about 20 to 22, that it actually went above 80 and was really up there. 90 was pegged up here, so it has plenty of room to go up. I don't think we'll look like that again, but you never know.